So much. It's good to be here with you guys. Did you give me ability to share as well?
Let's see. I made the magic happen. You can share now.
Okay, thank you so much. Couple
Please take
questions I
notes,
have
everybody.
before I get started. Couple questions I have for the group. There's 17 of us on here, roughly. How many of you guys, if you want to put in the chat or just raise your hand, whatever, how many of you guys were at the TKO conference that you might have heard this? So I see about three or four, right? Three or four of them? Okay, three or four. Okay. How many of you guys have been in the business longer than 3 years? Okay. Probably another three or four, maybe five. Okay. All right. I just want to kind of know what we're talking to. I just want to tell you a little bit about my background. I have been in the business for 30 years. One of the things I've done in the past was I have recruited, hired, and developed agents. And I think it's important to develop agents. And at one point, I had a group where I started with six brand new agents, all with less than 2 years experience. I got to 14 agents, and we wrote somewhere in the neighborhood of about $15 million of premium. And I became the number one director in the company that year with 14, 15 agents. Okay. And the reason I bring up that story is the two things I taught my agents was one, how to ask questions. Okay. You just got to ask questions. Never, if you want to be good in this business, you have to learn to ask questions. And don't be afraid to ask personal questions. Okay. Because if you're willing to ask the personal question, you are better than 50, 60% of the other agents. They just don't ask the personal questions. Number two is always know um, where you just always you pick up a sense and develop a sense to ask deeper questions as well. Okay. Because you really want to get to the why. You always want to get to their why and their emotion of why they want to do something and why they don't want to do something. And insurance is a number game for us, but it's an emotional game for them. Um, the other thing that I have done, if some of you are new, the one thing I want to say as a word of encouragement is you find a product that you like. I've sold just about any product under the sun other than final expense. I've sold Medicare, long-term care, health insurance. I've done estate planning. I've done mutual funds, investments, um, life insurance, even a little PNC. But my point that in all of my career, I've made the most money when I specialized for a period of time and I continued to increase my knowledge in that specialty. For example, when I did estate planning, I got very good at estate planning. So when you can talk to a family about, and they have 3 million, $4 million of assets, and you can just briefly break down how you can save them taxes, that's how you get larger premium. Okay. I'm going to talk to you about life settlements tonight. And I have made multiple six figures a year in life settlements. The last year I did it, I made over $500,000. Okay. So I don't say that to tell you that this is a get rich quick and it's a great niche to be in because it's going to make you rich. No, I say that if you become a student and you get really good at this and you can use the other markets you're in. If you're in Medicare or if you know someone in Medicare or if you're in long-term care or anything that you're doing with seniors with annuities, this should be a like a something that you just add on, that you add the questions into your fact find when they start sharing with you what other insurance policies they have. That's when you want to ask, why do you have that insurance policy? What is this purpose? How long have you had it? Is it serving the purpose that it needs to serve when you bought it? Okay. We all know that life changes. Okay. And when someone buys something, especially that 15, 20 years ago, the need may change. Okay. So that's what life settlements are able to do is help people turn something into an asset that they didn't think was an asset the way that I'm gonna show you how it works. Um, All right, I'm going to share my screen. Feel free to ask questions as we go along. Um, I'm going to go not slow, but I'm going to kind of keep it moving. If you don't understand, just let me know and we can stop and we'll look at something a little deeper, okay? Everybody see my screen?
Yes, indeed.
Yep. Okay. All right. I'm going to skip the family screen for now and keep going. All right. Definition. What is a life settlement? Raise hands. How many have actually heard of this before the TKO conference? Some of you guys heard of a life settlement before? Okay. Some of you heard of a viatical settlement before?
Yep.
Okay.
Are
Couple.
they the same? I think
They
that's
are
a
not the
question we
same.
had.
They are not the same. I'm going to explain on the next screen what the difference is. So first, let's just talk about what a settlement is. A life settlement, viatical settlement is when someone sells their insurance policy that they own, and the person who purchases it becomes the owner, and they have the beneficiary rights and the death benefit rights when they buy the policy. And buying a policy means I'm going to give you money. We're going to sign a contract just like real estate. I'm going to give you money and you're going to sign over the rights to that policy. So now, as the owner, I have all the rights to change it. I have the rights to the beneficiary. I have to pay the premium, but I have all the rights as the insured did, or whoever the previous owner was. Okay. But normally a third party like a bank or a venture capital fund or a private individual becomes the beneficiary of that policy. Okay. Any questions there? Okay. What is the difference between a life settlement and a viatical settlement? I think I just need to click. There we go. What's the difference between a life settlement and a viatical settlement? They're similar, but they're different, which is why I have a zebra and a horse here. Okay. They're both four-legged animals and they both serve similar purposes, but they're not the same. So a viatical settlement means someone has 24 months or less to live. They have 24 months or less life expectancy. So the industry actually started when AIDS hit and we had very expensive drugs, prescription drugs for AIDS that people couldn't afford, and they were selling their houses and they were taking money out of their retirement. And someone came up with this idea where, well, you have a short life expectancy. I'll give you some cash now. You sign over your life insurance. And that's what the viatical industry is. You have 24 months or less to live. The life settlement industry is everything that's 24 months plus. And typically, we're talking seniors and not ill people that are below the age, 65 or so. So 24 months or plus is life settlements, and that's what we're dealing with. So why do people sell their policies? There's all kinds of reasons why people sell their policies, but the number one reason someone sells their policy is because someone like you, an agent, let them know that that option was there. Most people do not know that that option exists. Okay. So just by adding a couple questions into your fact find or your questionnaire or whatever you send out, you will be able to open yourself up to this market that you haven't been able to before. Why do people sell their policies? Maybe their risk of lapse, they can't afford the premium anymore. Maybe their heirs have died or there's been a divorce in the family and they don't want whoever's the beneficiary to get the money anymore. You can also use a life settlement to fund something else, like a long term care policy or an annuity. Okay. So keep that in mind. It's always great to give somebody something and then receive something back. Okay. And in this case, we're going to give them cash and lump sum of it. So and lastly, some people just sell because they want a lump sum of money to go do something on the bucket list. They want to travel. They want to do something for their kids, their grandkids, things like that. Everybody has their own reasons why they want to sell. But the most important thing is they need to know. We need to be able to educate them that they can sell. By the way, Cedric, I didn't ask you how much time do I have here?
Uh, you got some time. One
Okay.
o'clock.
All right. So what policies qualify for a life settlement? I'm going to tell you almost any policy does. Okay. Almost any policy, even term policies. Okay. Now, term policies have no cash value in them. So you think they're not worth anything. But when an investor is looking at a policy, they're buying death benefit. And I want you to think about it this way. A life insurance policy is like a bond, if that makes sense. That's how they view it. They view it as a long-term bond, 10 years, 12 years, 15 years, 8 years. So when they're buying it as if it was a bond. Okay. For the seller, I want you to describe it to them as if it was like a reverse mortgage. It's not any different than a reverse mortgage. You're just taking an asset and someone's giving you cash for it now, and they're going to get the benefit on the back end. Does that make sense to everybody? Okay. So yes, term policies qualify. Even policies, if someone's retiring and they have a thank you for that, Leonard. They have a group coverage at work. Even group coverage at work can be converted. Okay. As long as we can convert it, there's convertibility and it's term, someone will buy it. Any type
Um,
of Go ahead. Yep.
quick question. So you said a group policy at work could be converted. So is this while they're still like employed, or is this like after they're no longer with them? Like when is the
Well, they'd have to
eligibility
do
for
it.
it?
Great question. They'd have to do it either while they were employed or during that time, that Cobra time they're given. Okay.
Okay.
Cobra gives you what, 60 days, 59 days, 61 days, something like that, where you can convert your health insurance, you can convert your life insurance and your disability
Mhm.
into a permanent policy, right? So that's when that would have to happen. Okay.
Okay. Thank you.
Great question. But any term, something Cedric was talking earlier, someone that you wrote a term on 20 years ago and it's a 25 or 30-year term, um, as long as it has that convertibility clause, we'll look at the cost to convert it. Okay.
You
So the
have
minimum
a
face,
oh, go
oh,
ahead. You about to say it.
nope, go ahead.
Well, I was definitely going to ask. Ran into a person. They had a their policies now down to 32,000.
Okay.
So I want to ask about that, but I see you got the numbers there.
Yep. The minimum's $100,000. The minimum they will buy is $100,000. Okay. Now, if you have someone with a $32,000 policy, bring it to me and we'll look at it. I have purchased policies in the past. Okay. And I continue I actually have a fund that I put together that I can purchase policies in. Uh, in the past, when I did this full time, I purchased altogether my company. We had at one point have owned and purchased $8 million of death benefit. Okay. I actually was working on purchasing a policy last year. My wife found one for me. It was a CEO that had a $6 million death benefit. And he had paid in $125,000. He had taken all the cash out of it. And all he wanted was to break even. So all he wanted for a $6 million death benefit was 125,000. Okay. The premium we figured out we could pay $25,000 a year. And even if he lived for 15 years, I would pay that's two and a half, just about, yeah, that's 250. So about $500,000 of premium. So I would be into this policy about $700,000. I'd have to wait 15 years if he lived that long to make 6 million. Anybody would do that investment? Okay. So that's about a 8x on my money, right? 9x on my money. So that's why companies do this. Now, most of the time they don't have those kind of ratios, but they're still looking to treat it like a bond and make good money. So who qualifies for life settlement? Old people, just old people. So we need them to be at least 76 years old. Okay. Minimum age is 76. If they're below the age of 76, they have to have some sort of critical, serious illness, okay, or terminal illness, okay, meaning cancer, which is not uncommon these days for people who are 40, 50 years old, 60 years old to have cancer. Um, but people who are over the age of 76, like my dad, is in his 80s and he has diabetes, He's not overweight anymore. He used to be, but he also has had a heart attack. He has heart conditions, things like that. That's someone who would qualify for life settlement based on just his health. Okay, his health. He's got multiple factors. We call them morbidity factors. Okay, that create a limited life expectancy. Okay, so that's what this whole industry is based on is life expectancy. Okay, whether someone's going to live for 4 years, 8 years, or 12 years. Now, I'd love for them to live their healthy life, what it should be. We don't need them to die any sooner. Okay, sometimes they go longer. Anyways, it's going to pay out no matter what. Okay. So if there aren't any questions about health, they just need to be either over age 60, 76 or have critical or terminal illness below the age of 76.
I got a question, Barf, and so in the medical impaired and below, right? Um, what could you hit some highlights of that? Does I think someone asked, does that include people with mental illness? Maybe someone may get into, that may be a parent that has some child with special needs or something. They were able to get something, have a policy, and they left that behind. What is that?
Okay.
What does that look like?
So I want to ask you the question, Cedric. If someone is the first one you said was mentally ill, right? Someone who's mentally ill, does that really affect their life expectancy?
That's a good question. I really want to be 50-50 on that, but no, I know it doesn't, unless we talk about something like I think of schizophrenia or something like that.
Yes, yes. Now, I will say this. It, thank you, Ken. That's the right answer. It does not. Now, it may increase their risk of death or them hurting themselves, but it does not increase their mortality risk. Okay. The second one, you said something about special needs. Is that what you said as well?
Yes.
Okay. Special needs will be the same thing. Someone can be incapacitated, not be able to feed themselves, not be able to take care of themselves, which they qualify for maybe the activities of daily living. They can't care for themselves, but it doesn't necessarily mean it changes their life expectancy. So that's what you have to think of. We're talking about people that are ill, people that are sick, okay? Or
Yes.
people that are over the age of 76. All right. So I'm going to give you guys an example here, okay? This person's 93 years old. Now, this in the chart, it says this as a survivorship policy, which means there's a husband and a wife insured at the same time on the same policy. Okay. This particular person needs liquidity and they don't need the coverage, and they have a $4 million policy. So here's some examples of health that qualify or that makes his morbidity increase. He's got kidney disease and he's obese. So they give him a 3.5 year life expectancy. I'm going to read Teresa's in just a second. Okay. So he's got 3.5 years left. Now, I would think 3.5 years is pretty generous for a 93-year-old man, right? I would think that he's already kind of lived his time frame, but maybe he's done well through the kidney disease. So Teresa says, like change support, diet, isolation, etc., are deadly paranoia. Okay. So I'm going to say that all those things that you mentioned can add to morbidity or add to your scale of morbidity, but something like a mental disease might get a score of adding 50 compared to kidney disease may add a 300, if that makes sense. So the things that there's a severity, there's a chart of severity of, so yes, you're right. Smoking may add 200 to your morbidity, but having COPD might add 600, if that makes sense. So that's why we underwrite, which I'll get to that in a minute. So in this example, this person had a $4 million policy, and he's going to sell half of it. He's going to sell 2 million of it to the company. So in this example, he's going to get $600,000 of cash roughly, and the agent's going to get $200,000. That's some serious dough, isn't it? Now, there aren't, I mean, there's a handful and there's a lot of $1 million policies out there. You just don't run into them every day, but they're out there. So I'm going to show you one that's a little less. Okay. This one is an 84-year-old woman. So my wife, my mother, not my wife, my mother just turned 85 on Friday. So in this example, this woman no longer needs the coverage. We have $1 million policy and she's got $62,000 of cash value. Okay. And they give her an 8-year life expectancy. So they're going to say she's going to live to 92. And she also has coronary artery disease. She has heart condition. So it doesn't necessarily mean someone's sick, but they have a condition that lowers their life expectancy. Anybody want to guess what this woman's going to get for her offer with 62,000 of cash value and $1 million policy? Anybody want to put it in the chat? What do you think she's going to get? 54,000. Okay. 60. You guys are basing that on the cash value, right?
I think I was looking at the cash value. I know y'all got
Okay.
some numbers. Let's see it.
Someone said 150, 120, 150. Okay.
I don't know how you guys are. I don't know what the method is to get the numbers, so I
Good
don't know.
question. Good point. Good point. Well, I'm going to give you an easy rule to go by, okay? But those are all good guesses. Somebody's got it pretty close. Now, understand this. The company that buys the policy is not buying the cash value, okay? They're buying the death benefit, okay? But the cash value is taken into um, consideration for the offer. So I want to tell you what this person received. Someone said, a couple of people said $150,000. That's exactly right. They got $150,000 for this $1 million policy, and the agent made $30,000. Okay. So here's your rule of thumb. And this is really what you're going to help. You're going to ask somebody, you're going to write this down because they're going to get anywhere from 2 to 3 times the cash value if it's a policy with cash value. Okay. 2 to 3 times. So in your questions, you would ask someone, if I could instead of canceling this policy, if I could help you get 2 to 3 times the cash value, would that be of benefit to you? Or would you be able to would you like to turn that into an income stream? Or would that help you pay for long-term care? Any question like that um, opens the door for them to be open to this idea. Okay. If you could get 2 to 3 times the cash value. Now with a term, it's different. It's just going to depend on, a variety of things with term, but they could still walk away with 30,000, 40, $50,000 for a term policy as well. Any questions about this or agent commission?
Barfy gotta hit that agent commission. I want them to know what the money is on the table.
Before
We
you get
can't
into
walk
the
away from that.
All right.
before you
Agent
get into the
commission.
commission, let
Say
me
that
ask.
again.
I say before you get into the commission.
Okay.
So with this one, this is a life. This case study here is the life settlement, correct?
Yep.
So I'm curious if it's 2 to 3% based in the life settlement. How does that money differ from the viatical side? Is it a lesser percent or is there a greater percent? Because of course we're dealing with time frames, right? Less than
Yes.
the
Yes.
24 months or 12 months, excuse me, or whatnot. So how does that money look different in a
Okay.
person's situation where they're closer to death, if you will?
Good question. Great question. So in this example, let's just say this woman had 2 years to live. Okay. She might get um, $700,000 to $800,000 for this policy. Okay. Because whoever buys it only has to wait probably 2 to 3 years, right? So let's just say we're trying to make 10% a year. Let's say I'm the bank. I want to buy this policy. I want to make 10% a year because it's guaranteed money. As long as I pay the premium and she dies at some point, I get the death benefit, right?
Right.
So I'd offer her in this case $800,000. That's still a 20% increase, and she's got a 2-year life expectancy. So I'm basically making 20% of my money, 10% each year. That's just a rough
10%.
equation. Does that help?
Yeah, no. It makes perfect sense.
Okay. So because she's got four times that, right? She's got four times that, but there's cash value. So then it goes, instead of it being, $200,000, it goes down to 150. Okay. Good question. Great question. Secondly, the agent commission is usually based on 3 to 4% of the face amount of the policy. Okay. 3 to 4% of the face amount. So in this case, it's $1 million face. They made 30,000. If it was $100,000, you're going to make 3 to 4,000. Okay. Any questions there?
Yeah, I have a question. Maybe it's slightly different. I remember when, getting my insurance license, they talked about insurable interests,
Yep.
and you had to be related to somebody in order to take out a policy on them. But this
Mhm.
obviously, you're not the company is not related to the people yet. They now have a financial interest in this person dying. So how do they get around that? I mean, obviously it's legal, but how does this happen?
Who asked
Because
that question? Who's asking that
the
question?
Ken Samuel,
Ken Samuel. Ken, how long you been in the business?
really 2 years.
Okay, so you remember that from taking the test, don't you, huh?
Yes, yes.
Well, Ken, I want to if I was near you, I'd buy you a coffee or even lunch. That's an amazing thing that you brought up, okay? And it's a great point. And the point is this, because life insurance is an asset, actually it's a tier one asset, which means it's viewed as cash and it's a contract. It's I'm basic just like real estate, I can sell my contract or my asset to anybody. Okay. So
Yes,
insurable interest is put into the picture for purchasing so that to avoid crime and fraud and things like that, right? But once I've owned it, it's the owner's property. So if you own a policy on your kids, that's your
I
property if
got
you're
you.
the owner, right? Okay. So the owner has all the rights, and that's what's in the life insurance contract. So their right to sell comes from the insurance company's contract.
I got you.
That
Yeah.
help?
So it's the owner choosing to sell his policy and not a non-relative placing a policy on them.
Yes. Yes.
Okay.
So let me give you an
Okay.
example. If you were married and you had a wife and you were the owner of your wife's policy and she was insured, you have the right as the owner to sell that policy, even though she's the insured.
Right. Okay.
Okay. The owner. So if you go back and read an insurance contract and it talks about ownership, the owner has all the rights to take out the loan, to sell the policy, to assign it, to do all those things. The owner has that right within the contract.
So would this be
Thank
similar
you.
to how banks, just in theory, I'm not saying people are the equivalent to, right? But this is the same way that banks move. When they fund say a mortgage, right? When they fund a mortgage or whatever, within a certain amount of time, they may sell that mortgage, being that they own it, to a separate individual for a lesser dollar amount, but the individual that's buying it is getting the back end glory of it, if you will, right? Because 2 to 3 times that's what you're spending over that time frame for the mortgage that you lend. So would ideally this be essentially a security element, if you will? I ain't gonna say security, but I guess it would be a security or whatnot, because these the numbers that's being put out are strong numbers. You know what I'm saying? Whether it's 7 to 800,000 to 150,000, give or take. So, would that be somewhat accurate?
Well, I'll say this: it's not a security, in a sense of how stocks are, right? Good question. It's not a security. It's treated that way in some of the laws and regulation that we put in place, but it's not a security. Um, What was the first part of your question? Was
No, I was saying, would it be like the similar? Would it be similar to how a bank creates a loan or mortgage or whatever?
yes, yes,
Yeah.
yeah. Thanks for yeah. Well, look at it this way. Let's look at it this way. In the financial world, it's all about time and money, right? And it's about, even the stock markets buy low, sell high, right? Okay. So in the financial world also, when there's a long-term debt, I don't care whether it's a mortgage debt, your car debt, or a life insurance policy, people buy or sell that contract based on time. Okay. So that's what creates worth. I mean, if you guys owned a store and you had um, credit card receipts or credit card or payables, you can sell payables, right? You can sell account payables to get cash today,
Right.
and someone else is buying that future payout. Same thing they do with debt, right? They
Mhm.
sell debt. They sell your debt at a certain dollar now, and if the company that's going to collect it is hoping to collect that future interest and that loan later on. So that's all this is you're selling something with a future payout.
Right.
That's why there's a discount.
I get it. I definitely get it. I was just trying to kind of correlate it.
Yep, exactly right. To answer Leonard's question, yes, I said 3 to 4% today. I said 3 to 5% on Saturday. It's just going to determine on the contract, but yes, the commission is usually about 3 to 5%. Okay. Someone caught me on that one. All right. So why do you want to work in this market? Why is this a good market to work at? The number one reason is probably the middle reason. 90% of the seniors do not know that this option exists. Okay. Most of them do not know this is an option. So think about it this way. Think about what we were doing for someone. Let's say someone has a policy, a whole life policy they bought. It's a small one. It's got $100,000 death benefit, and they have $60,000 built up in cash. And now they just think the best thing to do is stop paying premium and just take the cash out, right? In that example, if you could still get them 70,000 instead of 60,000 or 75,000 instead of 60,000, aren't they better off? You just made them 30%, 25%, right? So that's why this is so meaningful to people. So the first one, there's $200 billion of life insurance that gets forfeited. What that means is there's $200 billion of death benefit every year that goes unpaid. Okay. And there was a time period when the life insurance companies fought this industry. This industry's been around for 30 years. Okay. There was a time period where they fought the industry, but eventually they jumped on board with it because what the industry did was it allowed them to continue to collect premiums over time. Okay. Because when someone else buys it, they have to pay the premium. And so the insurance companies realized, well, let them sell. Actually, I'll blow your mind. I'll blow your mind. I know of a situation where a insurance company took a book of policies that they were going to cancel. Instead of canceling them, they took them to a settlement company and said, what would you give us for these policies? How's that?
So I got a question on that. Ideally, in that theory, to buy a bankroll, essentially that's what banks call it, like a bankroll of policies or whatever. In theory, if we will, what were they paying on that? Say it was 100, or let's say it was 1,000 policies, right? Just
Right.
get ready. So in theory, would they be paying somewhere about 12 to 15 cents on a dollar? Or, I mean, just kind of in theory.
Possibly. I would say anywhere from maybe 15 to 50%, 50 cents on the dollar, just depending. Just
Yeah.
depending. It depends on the ages. I'll give you a good example, and then I'll have to move on. But I'll give you a good example. I found a church denomination in Kansas. This is way back in early 2000. They had taken out 1,000 policies on their church members, and each church member took out $100,000 policy. Okay. Now, keep in mind, you have church members that are 18 and you have church members that are 60. Okay. So there's different life expectancies. And the church was, just for this example, let's just say it was $100 million of um, death benefit, and the annual premium was $2 million. Okay. If you did the math in the law of large numbers based on mortality,
Mhm.
they would have to pay on it for 13 years. So they'd have to pay in $26 million. And after they paid 13 years, pretty much it would be self-sustaining. They would never have to pay any more premium because then the death benefits would start covering the premium and they'd start making profit every year. Okay.
Makes sense.
Now, when I found that church or that denomination, they wanted to sell that book of business because they were having a hard time paying out the $2 million a year. And they were willing to sell $100 million of death benefit for about 6 million.
Oh man.
Okay.
Goodness.
Now, I actually put together an offer to raise money, and we were actually going to pay them 7.5 million for that book
Yeah.
of business.
Right.
And I put together an offer and started raising money toward that book of business. And the problem is, once again, the same thing happened to me with this other one with 6 million, is they could not keep the policies in force long enough for us to buy it because the deal was going to take about 6 months for it to happen. Because look at it this way: the insurance policy is going to go into every policy and change the policy and the beneficiary rights on every single policy, right? So they said we need 120 days just to make this thing work.
Wow.
But yes, that does exist, and I have, I participated in trying to make that deal happen.
Yeah. Okay. I
I
appreciate
give
it.
you, yes. I'll give you another example of a policy that I did buy. I had one where someone came to me and it was a $5 million policy. The woman had cancer. She had 4 years to live. The premium was about $20,000 a year, and she wanted $200,000 for a $5 million policy. Okay. So I'm going to try to wrap it up in the next 4 minutes. How do you find these policies? Well, the first thing is if you have any senior clients or if you have clients that have parents, okay, you just got to ask the questions. Ask the questions. Is there any, first you're finding out about what policies they do own. And what I really found works is asking them, so what is the purpose of that policy? Why did you buy it? And are you still using it for that purpose? If you can ask that question and they say, no, we're not going to use it for that, or maybe say, yes, we bought it for this, we bought it for mortgage protection. The mortgage is going to be paid off in 5 years or 10 years when we retire the way it was supposed to, and then we'll probably just get rid of it. Well, what if you could convert it and get all your money you paid out back for that? Or what if you could get, 2 times what your cash value is? Okay. The other thing is I have worked with referrals with medical people, and I said this at conference, and one of the groups that you can find the most referrals from is homeopathic doctors that specialize in cancer. Okay, because cancer doctors that are homeopathic aren't using prescription drugs. People go to homeopathic doctors because they don't want to take chemo or they don't believe in chemo, they don't want to take chemo. So they're going to use all kinds of natural ways to uh, treat cancer. And most homeopathic doctors don't qualify for insurance, so people have to take it out of pocket. So just like the AIDS patients did, they have to come up with 30, 40, $50,000 for treatment that may extend their life 3 to 6 months. But some people are willing to do that. And that's if you can get with a group of professionals that's what they do, you can get referrals. Also, places are assisted living places. Marketing managers at assisted living places are always looking to fill rooms with people that can pay. Okay. And they visit with families all the time that say it's too expensive to move into that assisted living place. Well, you get into assisted living place with a marketing manager, get me on the phone, get me on that call, and I will work with you to get them to start getting you referrals for life insurance. Because if there's a way that they can get a lump sum payment from some people and they can get them in early because all they want to do is fill those rooms, right? Past clients, parents of clients. Someone's already had 2 calls recently. Someone said they talked to their pastor. I also had one. I talked to my pastor as well. And so just start using your core group. But I say anytime you sell a policy, whether someone's 40 or 50, ask about what their parents have, or if you're selling Medicare, ask what insurance they have. Is it still serving the purpose? Do you still want to continue to pay premiums on it? Or what if I could turn that into some income for you? Okay, does that help? All right,
Definitely helps.
Absolutely.
I think we're almost done. What's the process? So the process for doing a life settlement is the same thing for purchasing a policy. They fill out an application, the company requests medical records because now we are underwriting their life expectancy. Same thing, actually, what we do when we sell the first policy is based on life expectancy and health. It's same thing at the back end. We're underwriting medical conditions and life expectancy. Then what happens is the company will come back with an offer, and then you and I will work on negotiating that offer with the insured because your commission is part of that offer. Does that make sense? So that they get a gross offer, and your commission is part of that offer. So then we negotiate that with the insured and we present that to them. And all at some point, all they have to do is sign a paper that they accept it. It goes to the insurance company. They change the beneficiary and the owner, and they get a check. And it's pretty simple. Now, it can take about anywhere from 30 to 90 days, right? Because we got to get doctor records, which is usually the thing that always holds something up. But the process can be done pretty quickly. I think that's about it. Yep, that's it. Here's my email address. I'm going to put my link in the chat if you want to get on my calendar um, to set an appointment. I'm more than happy. The other thing, if you email me and ask me for a presentation, I'll send you a company presentation that you can alter, you can cut and paste, you can change the colors, you do whatever. So you can use 3 or 4 pages to do your own presentation to people if you'd like to have one.